Hey, so in anticipation of tomorrow, 5:30 a.m., when we get the CPI release and the next day's PPI release, producer prices and consumer prices, also at 5:30 a.m., we want to prepare for what could really shock us and hurt us. And that would be a reanimation of inflation, which we saw in the United Kingdom. We saw core inflation go to new highs, which is scary because it wasn't just going from a high down and then up again. It was actually a new high that we had in the United Kingdom. You also just had Germany's inflation figures come out, which showed also a recovery in inflation. In other words, inflation surprising to the upside again. Now, some of this was expected, but let me just look at some of the stories we're seeing around this. Okay. German inflation bucks downward trend in June, and all of a sudden inflation rises for the first time in 4 months. These are the things we're seeing again. German inflation rose in June, interrupting a steady decline since the start of the year. German inflation increased by 6.8% on the year in June, and that year-over-year rebound is almost exclusively due to base effects, they're saying. Basically, this going away of base effects is actually leading inflation to go up again. Now, this is a problem because we could see something like that happen in the second half of the United States as well, where June-over-June comparisons for the United States will be a peak to hopefully low. But then when we get to next month and the July inflation report, we're not going to be comparing to the highest level anymore. We're going to be comparing to a level that's declining. So what that means is you could potentially actually start seeing inflation trending up again rather than simply straight down. I know that sounds sort of remarkable, and before we get into what to actually look for tomorrow, let me just give you a little bit of a visual look of what that might look like, so maybe it'll make a little bit more sense. So what you're going to do is just go to St. Louis Fred and type in CPI or something like that. And what you want is the actual CPI number. And that looks like this. This is the actual CPI number. And what we'll do is we'll reduce the time range to more recently here. And we'll go to our peak here in June of 2022. This is when we had the peak inflation rate. And that CPI level was 294.728. That was June of 2022. And if we look at this on a percentage basis, just so you can see that that is actually the peak, all we should have to do is go to percent change from a year ago, and that should be the peak. There it is, June at 8.93%. That was like a 9.1, but it was revised down. So now I know this is a little funky, but here's the reason why those numbers matter, and then we'll get into the projections. Hey, quick reminder to check out the programs linked down below on building your wealth. We've got an amazing coupon code available now that does expire on July 25th. We'll also be raising the price. We'll have one of the largest price increases this year on July 25th, so make sure you get in before then. You can buy now, pay later. You can bundle up by emailing us at staff@meetkevin.com. You can check out the bundles on the website or the various different programs. Most popular bundle, Stocks and Psychology Money and Zero to Millionaire Real Estate Investing. We'll see you there soon. When you have a chart that kind of looks like this, and let's say we are right here where the green is, when we're comparing to, on sort of a straight line here, when we're comparing to that prior read, we're going to get the smaller read here than we would if we were, let's say, next month. We'll make it actually purple here. Next month comparing to this hole right here, right? So in other words, I know it sounds crazy, but when we're comparing to the highest point of last year, we're going to get the smallest CPI report now. But because we get a small dip after that, you actually get the potential for a higher CPI report next month, which is partially potentially why you've seen some of these rising inflation reads in countries like Germany. So when we zoom in over here, look at how on the St. Louis Fred website you actually have that little drop right there going into July. It's pretty minor, but that sort of base effect decline could actually amplify our next month's read. So keep that in mind for CPI. Now let's actually look at some projections and where they stand. So first, CPI month over month in the last read was 0.1, expecting 0.3. CPI core month over month, expecting 0.3, the last was 0.4. So basically 0.3, 0.3. Then CPI year over year all the way down to 3.1, with core year over year coming down to 5% from the prior of 5.3. Prior year over year was 4.0. Now, I want to show you how those projections actually play out in terms of, well, we'll see how they actually play out tomorrow. But when we look at these on a chart, we can see the distribution of expectations here. So here you have 58 qualified economists with 63 estimates. This is for your core month over month read, and you can see most of them expect CPI to come in between this 2.5% and 3.5% range over here, with a skew to about actually 2.9, so left side here. Obviously, any kind of read above 0.4 in this core read would be unexpected and probably lead to some kind of market shock, whereas it's more likely that we'll actually come in with a 0.2 than a 0.4. Which is what I'm hoping for. I'm hoping we get a 0.2 in core. That would be really good for markets tomorrow. And that's what I'm expecting. I'm actually expecting a miss that we're going to come in with a 0.2. Could be wrong, but I do think that next month we'll probably have, in the next 2 months, we'll probably have more of a scary core bump because of all the real travel season data coming through for July and August. So July and August, and those base effect concerns, I think, are going to be a worse CPI report than this one. I think this CPI report could still be good. We'll see. Markets should be pretty tenuous until this comes in. And then, of course, if you look at non-core is expected to be 0.26. You can see the distribution here. So this gives you a little bit of the projection for CPI. The next report comes out the very next day, and it's the producer price inflation. So it's the business side of it. We're looking for final demand at 0.2. Core, excluding food and energy, at 0.2, and then excluding food, energy, and trade coming in at 0.1, are the expectations. So this gives us hopefully one more good, solid CPI report. Things are going to get a little funky and more granular once we get into July and August. But for now, I think we should be okay for tomorrow's CPI report. Knock on wood, but I'm optimistic for tomorrow, and I'll be a little bit more bearish for the next two thereafter. So hopefully this gives you a little bit of a heads up. And I'll see you tomorrow at 5:30 a.m. Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced